Welcome to Sovereign Finance, the show that connects the dots between personal finance, global finance trends, and deep human history. Tune in every week to demystify the money puzzle and protect your interests in a turbulent world. Welcome to Sovereign Finance. I'm your host, Rob Drummond, here with Derek Dearden. How are you, Derek?
Yeah, good. Thanks, Rob. Yeah.
Yeah, good, thanks. Our subject today is BlackRock, which is an entity that I have to admit before 2020 I was not aware of, and courtesy of the pandemic, whatever we want to call it, I now am aware of BlackRock. So what is it and what do people need to know?
Okay, well, it's a fund manager, which essentially means that it takes the aggregate investments of a large numbers of people or a large number of organizations who in turn are collecting investments from a large numbers of people and buys the stocks and shares and bonds and any other kind of investments that they want to make. And they claim that they are able to do this in a way which is more effective than those people could do themselves. And a large proportion of the capital that they are operating is from various pension funds right across the United States. Various individual states have pension funds for their government employees. Large corporations have pension funds for their employees. And of course, a lot of people manage their own pensions, either because they're independent professionals or entrepreneurs or business owners, or because they want an additional provision for their old age that they create under their own initiative. So, as I think we mentioned when we were looking at the way that pensions were working out these days, it's an arrangement where over the course of your working life, you pay in regular amounts. This gets invested. The income and the capital gains from those investments get reinvested which in theory should allow it to grow exponentially to the point where it can produce an income of a similar order of magnitude to your final earnings. The thing that is remarkable about this is the extent of its hold over the entire corporate landscape. If you look at, you want to go and buy a fizzy drink, should you be reckless enough to want to do that, you could buy Coke. Alternatively, of course, you could buy one from its major competitor, Pepsi-Cola. But when you actually look at the ownership of the shares in Pepsi-Cola and in Coca-Cola, you would find that one of the top investors in that, typically with the high single-figure investment, is BlackRock. And then you look at Coca-Cola and you'd find the same thing. Similarly, if you're in the computer world, you might choose Apple or you might choose Microsoft. And then if you look at the ownership of Microsoft and Apple, you'll find that BlackRock is one of the top three shareholders of both of those corporations. And it goes on further. If you look at the first three of many corporations are in one order or another: BlackRock, the Vanguard Group, and State Street Investments. Now, State Street Investments is actually owned by BlackRock, and there is also a considerable and rather obscure cross-ownership set of arrangements between BlackRock and
Yeah, like BlackRock will often be like the principal shareholder, but then Vanguard will be like the second. Yeah, so it makes it kind of murky. So if you want to ask, like, well, who owns Google? Let's say, well, it's kind of murky because the parent company is Alphabet, and then the leading investors in Alphabet are probably Vanguard and BlackRock.
And it's a slight exaggeration to say BlackRock owns the world or owns the majority of these corporations in the world, but not very much, because even though typically the shareholdings of those three, BlackRock, Vanguard, and State Street, probably add up to between 10 and 15%. And so that's not exactly ownership of the whole corporation, and it's not exactly a majority shareholding. I mean, to have complete control of the company, you'd need to own more than 50% of the issued shares. But having said that, almost certainly that's more than enough to dominate the voting at the annual general meeting of each of these, and determine the shareholder, determine the appointments to the board of directors of that company, and probably to affect the appointment of the senior executives. And of course, even if they don't directly appoint the senior executives, then the board members will appoint them, and so they will be placeholders. And amongst those major corporations, there's an enormous overlap between the board members of one company and the board members of another. So
what are the implications?
Well, the implications are that this has one of the buzzwords that you may have come across recently is ESG, environmental, social, and governance. And these are supposed to be guidelines for running large businesses in such a way as they are responsible and looking after the planet and all this kind of thing. Having said all that, I think it's highly dubious whether they do or not, or whether this is just yet another attempt to steal the clothes of the opposition, having recognised that there's public concern about these matters. This buzzword has been created, and that framework of ESG was in fact proposed by Larry Fink, who is the founder of BlackRock. And I'll go a little bit into the history of this, because that in itself is quite extraordinary. Larry Fink was a fund manager at First Boston Bank, and in 1986 he managed to lose $100 million with a mistaken bet on the likely movement of interest rates. And you would have thought that would be the end of his career. But 2 years later, he had managed to put together a series of proposals where he had decided that he could evaluate risks better, and he took the proposals for doing that to a firm which, funnily enough, was called Blackstone Investment Management. And he managed to persuade the owners of Blackstone that that they should give him a chance to try out his of investment, and based on that, they offered him a £5 million line of credit in return for a 50% stake in that particular operation, which was originally a subsidiary of Blackstone. It wasn't yet called BlackRock. By 1992, he'd managed to grow that $5 million up to $17 billion of assets, and they decided that this was getting good returns for his investors, which is why they were coming back to him. But I mean, it's still a pretty astonishing rate of growth. So at that point, they decided to spin it off as a separate company. That's when they called it BlackRock. And there was a sort of something of an in-joke that BlackRock and Blackstone would be confused between the two of them. And by 1994, that he was falling out with the owners of Blackstone, and agreed and they sold their half share for $240 million. That turned out to be a very good deal for Larry Fink, and not such a good deal for the ones who sold their shareholding, because 7 years later, by 1999, BlackRock was now managing 165 billion of funds. Now they're up to something like 10 trillion, and they have a computerized trading system which is called Aladdin, which they developed, and Aladdin is used by many other Wall Street investment firms, and there's a total of $20 trillion that are using the Aladdin software. So I think this in itself has a great deal of capacity for systemic weaknesses appearing in the market if everybody's seeing from the same hymn sheet to that degree. The price movements are going to be avalanching all in the same direction.
I think it's worth referring back to the episode we did on big numbers as well, just to underscore how big a trillion actually is.
Yes. Okay. So I'll just summarize very briefly, so that £1 million or dollars is the typical lifetime earnings of an average person. If you're happy enough to accept my thumbnail definition of an average person as being the one who earns an average of $25,000 a year in a working life of 40 years, that comes to $1 million. So $1 billion is the lifetime income of 1,000 people, and $1 trillion is the lifetime earnings of 1 million people.
It's quite a big difference.
Yes. And of course, a few other numbers in there to pad this out. Various figures thrown about for the total of wealth in the world. It's somewhere in the high tens of millions. The federal debt of the United States was 33 trillion the last time I looked at it. But in itself, that's a revealing characteristic, because it shows the amount of funds that are directly or indirectly influenced by Blackstone, or of the same order as the entire American state.
And actually, BlackRock probably has a much greater GDP, if you like, than the majority of nation states.
Absolutely, yeah. Incidentally, another interesting fact about Larry Fink is that in 1983, that's 3 years prior to his losing the $100 million, Larry Fink originated the concept of collateralized mortgage options, which was the system for purchasing a large number of mortgages, putting them into various funds, which were split into various levels of risk and various levels of return. And of course, this was the financial instrument which was a major contributor to the 2008 financial meltdown. And an interesting thing I learned this morning, Rachel Reeves, our new Labour Party Chancellor of the Exchequer, is talking about managing to invest in the infrastructure of Great Britain by a scheme of public-private partnerships, and actually mentioned BlackRock as being likely to be helpful in doing that. And that's probably something, the whole notion of this way of handling public finances. Probably something we should cover in another episode anyway. The Labour Party and Gordon Brown years were heavily into public-private partnerships, and this has resulted in a lot of rather shoddily built schools and poorly supported hospitals, which are costing the taxpayer enormous amounts of money and will continue to do so in the future. It was essentially an accounting measure to ostensibly reduce the government borrowing. But of course, by having part of it financed, they still finance that with borrowing. But as the government is able to get the best interest rates of anybody, raising the same amount of money through some kind of private bond issue is inevitably going to be more expensive. And then, of course, you've got all of the whatever other payments there are to the so-called private investors who are doing it. It's really more transfer of taxation into the pockets of financiers. So it will be very interesting to watch that space and see how that works out.
What are we arguing then for people? Just to be aware of what's going on and have a sort of top-level understanding?
I think that's all I can really offer at the moment. As we've said elsewhere, if you're looking after your own pension, you want to at least join up the dots and see who is investing on your behalf, how they're investing, and whether they're involved with this, and whether there are alternatives, your pension plans or your insurance funds or any other kind of long-term investments that you're interested in making.
At some point, I imagine BlackRock are going to be invited to rebuild Ukraine, Gaza, all of these places. You might not necessarily want your pension going to that end.
Yeah, that's a fair comment. And another point to be made is that, of course, BlackRock is heavily invested in all of the arms manufacturers. You know, all of the mining companies, all of the energy companies, all of this great tentacle of capitalist enterprises, which between them are the real existential threat to the planet.
Are there any known resources that people can go and look at to learn more about this?
Well, James Corbett, CorbettReport.com, has got several pieces on BlackRock, and a very great deal more detail than I've been able to convey in this talk. But that is a very good source for it. I think if you hunt around, most of the I'm sure that many of the people listening to this have already got connection with a number of other alternative news resources, particularly on Substack and Rumble and so forth. Nearly all of them have done a piece of one sort or another. Take it from there.
I'll dig out the Corbett report that he did, because there was about an hour-long video, wasn't there?
Yeah, absolutely.
Yeah, so we'll dig that one out.
Okay, great. Yeah, you could put a link in there.
Yeah.
Yes. Okay, I think that'll do for today, yeah?
Yeah, sounds good to me. Thanks. Thanks for listening to this episode of Sovereign Finance. For more episodes, transcripts, in-depth articles, and the community, please take a minute now to subscribe free at sovereignfinance.substack.com. See you next time.